You've been following the real estate market and have been interested in getting into real estate investing. And you've heard the acronyms of BRRRR, which is short for the buy, rehab, rent, refinance, and repeat, but don't know where to begin. In this video, I'll show you the step-by-steps to take whenever you're looking to build your property portfolio. If you're looking for more buying tips on how to invest in real estate, be sure to subscribe below and let's dive right in. Jimmy, one of my investors from California, reached out interested in purchasing some real estate investment homes here in the Vegas area. He found my information online, reached out to me, and I was able to get him in front of some of the listings here that are distressed, properties that are already currently leased out where he can just assume the lease agreement. And the property that I presented to him was actually for $300,000. 4-bedroom, 2-bath in a great neighborhood, and is actually already collecting $2,300 in rent a month. For beginners, what is wholesale? Wholesale is just another term to say that the property that you would be buying is either distressed, in poor condition, sometimes they're undervalued, or most of the time is undervalued, which makes it easier for you to go in, pick up the property at a lower rate or lower price, so that way you can go in, rehab, renovate it, and lease it out at the highest market value. The first 3 steps in the BRRRR strategy touches on buying the property, rehabbing it, and then renting it out. So let's focus on those 3 right now. Jimmy was able to buy the property with a hard money loan. He's gonna go in and actually rehab it. But in this case, because tenants already live in the home, that tells you that the home is livable, cash flowing monthly. Ultimately, he doesn't have to do anything, but because he will eventually refinance this loan, it is advantageous for him to go ahead and add what we call forced appreciation into the home, where you add $10,000, to fix up floors, maybe, spruce up the restrooms and add new countertops to the kitchen. 3 very important areas that you typically would gain immediate value to. So in this case, after Jimmy had purchased the property, he is now looking to refinance the hard money loan into a traditional conventional loan. So the max that lenders offer on refinances, whether it's a rate and term or cash out on investment properties, can range between 70 to 80%. In this case, let's just be conservative and call it 70%. So Jimmy puts in $10,000, call it $15,000 of upgrades. He bought the house at $300,000. He added an extra $50,000 in value by only contributing an additional $10,000 to $15,000. So if you take $270,000 divided by his new market value of $350,000, we would be right under the allowed refinance amount, which is right at that 70%. So he's going to be moving his 14% loan with the hard money lender that was about a $2,600 payment or a $270,000 loan into now a 30-year fixed mortgage at a 4.5% interest rate, okay? Reducing his monthly note to about $1,500. So let's reel it all in. So he's currently collecting $2,300 by assuming that lease agreement. His new mortgage payment is $1,500. He will eventually be cash flowing $800 a month. So yes, we didn't include any property management fees or operating costs, but right off the gate, the goal of investing into real estate is to be able to cash flow day one. And we were able to achieve that in this case. So if you look at it, his initial investment in this purchase was $30,000. He purchased the house for $300,000. He did the loan for $270,000 to be able to cash flow $800 a month with the $30,000 initial investment. It's pretty profitable, wouldn't you say? So I know not all deals are slam dunks, but a lot of people out there getting started tends to question, oh, what if I can't find a tenant? What if the tenant, trashes my house? You gotta remove the what ifs, because in anything that you invest in, whether that's real estate, stocks, whatever the market is, there's always gonna be risk involved. But if you continue to let those what ifs get in the way of you taking advantage of an immediate appreciation, the cash flow opportunity, and also just building that net worth all together, you're going to be losing that opportunity to another investor that has already removed all of those concerns and weighing factors. So if this story resonated to you as a new investor who is maybe recently retired or new to investing and want to learn more about how to get involved with the BRRRR strategy, my information is below. My name is Kandy Katz, helping you finance your next investment property. Thanks so much for tuning in. Be sure to check out my playlist for other home buying tips, and I'll see you at the next one.